G'day, my name is Brian Johnson. I've just shown you doing another trade for you and showing you how when this hit the bottom line and you had a trade in and we went two reds, it's looking like a possible short. And in this volatile market, once again, we have a protective stop loss, if you like to call it a stop loss, but it is in fact taking a position so that always you're in front, so you're never going to lose. So you've effectively locked in these two very closely. This is a valuable point in trading. The original trade you saw me put on here had fallen down below this to this point. Normally I'd wait to here, but I want to show you today the idea of protecting your trade with a counter sell against a buy and locking in that point as the maximum you can lose on your buy. The sell can go back up and this becomes a profit. You can once again lock in the trade when it falls against you in the opposite direction or continue trading. It's like having a bet two ways. Later on I'll talk more on this. At the moment we're looking at locked in your two trades. We've locked them in for the time. Let's see what happens. If this red continues down and it's going to go lower a red, then we're in a short trade with the long on, and we are protecting our total drawdown to some degree. Once again, we still have a buy volume at 64, a sell volume, so this is still long, it's still in trade, but we have the two down and the two up. Now we're applying the sell on two down and we have a two up trade. We're looking for higher highs, higher lows. At the moment we have not got that, so we've just locked them in and waiting to see what happens, which way we go. We'll come back to you later, I think, on this trade when we see what's going to happen in the market. Once again, we're trading a very volatile market. Notice just then the US dollar, it looked like some buying on the US dollar was coming in. You notice that this is moving up on the US dollar. It means, and this is starting to move down. So we have a very strong possibility that we may go down, but we don't want to guess this market. It's too hard to guess. We want to keep our level of drawdown to a fixed point. At the moment we are still biased to the long. As you notice, we have two buys on long, one on short. So our bias is still long at this stage. Our bias is still long at this stage, as we have not reached a lower low here yet. When we reach a lower low, it might be a bias on the sell stage, but we have kept our biases open. So in this video, I was lucky to be able to show you the way of controlling your drawdown, keeping your bias. Our bias is still trading long, as it is a rollover tomorrow, and we have a protective short on, which we locked in here. If the short runs away, it's protecting at least one of our long positions. Our drawdown will be kept within a very, very tight range. Jack uses 0.2 on here, then we'll take off one when it gets down to the lower level. But in this case, this is how I do it. I'm not sure exactly how Jack does his, but this is how I do it. And I hope it gives you a few ideas. We've locked our level in. Our profit for this time is still greater than our loss. Our opening balance is greater. Our closing today balance is higher than our open. Our margin level is very, very handy, very predictable, and we're trading, as I've mentioned often, the minimum lots per your broker rather than higher lots. Trade minimum lots, especially in times like this. On a 5,000 account, you are trading within very, very safe range. You're riding the market out in a very tough economical condition, and you're doing it safely. This is what I impress on you always to do safely. You notice that had gone down below the close price of the day. It had gone down below the close price of the day, so a short, it may be possible if it drops down even further, the short may be on for this session. And once again, we're talking of 8:52 Adelaide time. In about 4 hours, 3 hours to 5 hours time, there'll be another market change, and then you should be ready for the change. You can see that it's now gone 3 pips down, and we don't take our profit until that goes right down and starts to go up. I suspect that we use a 1, 2, 3, 4, 5, 6 points down, so we'll go down 6 points and a bounce back up. So we should be in a good position for the rollover tomorrow. This is just the way I trade the Forex. There's no right or wrong way. Trade for fun. Enjoy trading the Forex. Have a great time. God bless, from Brian. This is what I call trading bias. It's still long bias against one short bias, but this short will eventually go into profit. Then hopefully it will do a rebound, and we can have a rebound trade if we're lucky. Bye for now, from Brian.